Okay, let's jump right into it. Welcome to this explainer, where we're going to break down the absolute most crucial first step from Steve Green's fantastic book, Financial Health in the 30 Steps, From Debt Chaos to a Balanced Budget. Think of me as your empathetic financial mentor today. We are taking a totally non-judgmental, step-by-step approach to finding your true baseline income. So we're not here to make you feel guilty about your spending habits or, yell at you to stop buying lattes. Instead, we're simply gathering data to give you the clarity you need to organize your household finances completely stress-free.
Here's our quick roadmap for the journey today. We'll cover the income illusion, finding your baseline income, income types and rhythms, calculating your survival number, navigating financial emotions, and finally, naming your income strategy.
Let's start with part 1, the income illusion, and exactly why the word about is so incredibly dangerous when it comes to your money.
When most of us sit down to budget, our first instinct is to immediately start slashing expenses, right? It feels responsible. But doing that actually skips the entire foundation of personal finance. Think of your budget like a bathtub. If your expenses are the drains, your income is the faucet. We absolutely have to measure the water flow before we even think about messing with the drains. You just can't make stable decisions without knowing exactly what's coming in. And as Steve Green points out, most of us think we know our income, but we actually just know our salary, which is a wildly different number.
That brings us to the absolutely critical difference between gross income and your safe baseline income. We'll keep it totally jargon-free here. Gross income is what you earn before taxes and all those deductions magically disappear. Net income, your safe baseline, is what actually lands in your checking account. Here's the reality check. Your bills do not accept gross income. If you've been doing mental math with those pre-tax numbers, you're basically building a plan on fantasy money. And honestly, that is a one-way ticket to constant low-grade nervous tension.
Now, why do we do this? Well, behavioral economists call this optimism trap availability bias, or cognitive availability. Essentially, our brains are tricking us. We vividly remember those amazing months, the month with the massive overtime or the huge tips, and our brain says, hey, we'll always make this much. Next thing you know, you're committing to an expensive car lease. This bias creates an overly optimistic baseline, causing accidental overspending that keeps you trapped in survival mode. Measuring things accurately shuts this illusion down instantly.
Moving on to part 2, finding your baseline income. This is all about grounding your budget in hard, real data. Let's do a really simple exercise to find your true numbers. First up, what's your income type? Stable fixed income means those wonderfully consistent, predictable paychecks. Variable income is for our freelancers or gig workers whose pay bounces all over the place. And mixed income is a steady base salary plus inconsistent extras, like overtime or a side hustle. You have to be honest with yourself about which bucket you fall into, because the biggest financial mistake you can make is pretending your income is way more stable than it actually is. So, to break the illusion, Steve Green recommends tracking your actual net bank deposits over the last 3 months. Just pull up your statements for month 1, 2, and 3 and find the average. But, and this is a massive but, if your income is variable, you have to use your lowest earning month as your safe planning baseline. I know that sounds like a bummer, but planning around your worst month isn't pessimism. Actually, it's just smart risk management. It gives you instant breathing room when things are tight.
Once you've got those numbers, take all your income streams and drop them into one of 3 categories: reliable, variable, and uncertain. Your reliable money? That is the only money you should ever use to pay your fixed bills. Period. By separating your cash like this, you completely protect yourself from building a life on wishful thinking, like counting on a holiday bonus that ends up getting slashed, or budgeting for a client who suddenly ghosts you.
Let's head into part 3, income types and rhythms. We're going to map out your cash flow. Okay, so knowing how much you make is great, but it's not the whole picture. We also need to know exactly when that cash hits your account. This is called mapping your payment rhythm. Step 1, write down your typical pay dates. Step 2, write down when your major bills are due. Step 3, look closely for those super stressful timing gaps. Doing this uncovers massive headaches before they happen, like realizing your heavy rent check is due on the 1st, but your primary paycheck doesn't actually clear until the 5th.
I absolutely love this insight from the book. Timing problems are logistical, not moral failures. It is such a relief to realize that being short on cash just because the dates don't line up doesn't mean you're a bad person, and it doesn't mean you're inherently bad at money. It's literally just a structural plumbing issue, and we can easily fix the pipes once we see the layout.
All right, section 4, calculating your survival number. This is your keep the lights on minimum.
Now that you have your safe baseline income,
Let's figure out the absolute minimum amount of money it takes for you to survive. And we're doing this with zero judgment. Remember, this is not your dream lifestyle budget. This is a strict, bare-bones list of the essentials required to keep your world from falling apart. We're talking housing, keeping the lights and water on, basic groceries, getting yourself to work, making minimum debt payments so you don't default, and insurance. That's the whole shebang. Add those up, and that is your survival number.
Let's throw some numbers at this. Let's say your calculated survival number is $2,300, and your safe baseline income from our earlier exercise is $2,900. Well, boom, you instantly know you have a $600 buffer every single month. You can use that for flexibility, aggressive debt payoff, or savings. But what if your baseline is actually lower than your survival number? The text makes it very clear. Do not panic. It's just raw data telling you that you're currently under-resourced, which perfectly sets up your next strategic moves.
And this phrase really hits the nail on the head. It's exactly why we only cover our core survival expenses with that reliable income category we talked about. You never use projected bonuses to pay the mortgage. Hope is a wonderful thing to have in life, but hope is not income.
Which brings us to part 5, navigating financial emotions and moving from discomfort to clarity.
Look, staring down these raw, honest numbers can bring up a lot of intense feelings. Fear, frustration, maybe even relief. But as we walk through this together, I want us to completely reframe that experience. If these exercises reveal that you are coming up short, drop the guilt right now. Discomfort is often just clarity arriving. Think about it. An accurate diagnosis is the absolute first step toward a cure. Hidden problems fester in the dark, but revealed problems, we can solve those.
Take a look at this quote from someone who participated in the book's program. "I always feel rich right after payday, then panicked 2 weeks later." Talk about an emotional roller coaster, right? It perfectly shows what a misdiagnosed budget feels like. The huge takeaway here is that predictability lowers your anxiety so much more than the actual size of your paycheck. When your brain is constantly guessing if there's enough money, it's stuck in threat mode. Finding your true numbers creates serious psychological safety.
Finally, part 6, naming your income strategy to reclaim your control.
To really lock this process in, Steve Green suggests a brilliantly simple psychological trick to help you take ownership of these numbers. Give your baseline income a creative name. You could call it the calm floor, or the stability line, or even something like Operation Cover the Basics. It might sound a little silly at first, but it genuinely works. Naming it significantly dials down your brain's threat response. You're taking this abstract, scary financial concept and turning it into a concrete tool, which brings an incredible sense of calm and control to your everyday life.
So, as you go off to apply this baseline exercise to your own life and get those household finances beautifully organized, I want to leave you with one critical question to think about. Where does most of your stress around income actually come from? Is it the total amount, or is it the unpredictability? Be completely honest with yourself here, because your answer will tell you exactly what kind of financial stability you need to start building next. Thanks for hanging out with me for this explainer.